Hello and welcome to the Davidson Institute's recorded webinar, Getting Started in Business. There are many reasons people want to get started in business: to make money, to be your own boss, flexibility, and building an asset that could potentially be sold or passed on to the next generation. Starting your own business can be an exciting time, and some of you may be considering buying an established business, or others may want to start their own business or perhaps join a franchise. For many, though, it is one of the biggest decisions of their life. Building solid foundations for the business to operate is absolutely essential. It's a lot of hard work and you'll have ups and downs along the way. But with careful research and planning, you, like so many others, can watch your dream of being a business owner come to life. So throughout this webinar, we're going to take a high-level look at the process of getting started in business and some of the many considerations that you need to make along the way. Now, every business starts with a vision of what you are aiming to achieve in the business and why. Once this is clear, you need to start to plan how the business will operate so that you can achieve what you've set out to. The rubber then hits the road in the creation part of the process. Now, this could be considered the boring bit, if you like, all the paperwork, dotting the I's and crossing the T's. However, this step of the process is absolutely essential to making the next stage, the launch of your business, as successful as it can be, when your idea becomes real and you interact with your first customer. Now, every business owner in the world started just like you with an idea or passion that they believed could make them money. They too wanted perhaps to be their own boss, flexibility, or to build an asset that they could potentially one day sell or pass on. Your idea or passion is your vision. Many successful business owners have clearly articulated visions which keep them on the path to success. So let's start with some advice from some well-known business owners who have grown their idea into a well-known household name and big business, showing you that even big business had to start somewhere and all have had ups and downs along the way. Everyone has their own idols or people they aspire to be like. So these are just a few people who started with a little idea that became large, and in doing so have become icons. We can learn lessons from all who've gone before us in taking a chance and starting their own business. Now, Sir Richard Branson's initial foray into publishing wasn't particularly successful at the time. However, he learned from the experience and has gone on to build a huge empire. And I really like his philosophy around doing something that you are passionate about and creating a better life for you and the world around you. Someone else whose little idea became large is Henry Ford. Now, his vision was to use economies of scale to systematically reduce costs and make the unaffordable affordable for more people. And this has led to him being credited with being the father of mass production, which of course has revolutionised manufacturing. A little closer to home, Janine Ellis never believed that her little idea for making fresh, healthy juices could have turned into the international success that Boost Juice is today. But as she says, running a business is not as complicated as I thought. If you simplify everything, if you are sensible when making decisions and look for solutions that exist for every problem, you can go far. Now, each of these people had a vision and a passion to realise that vision. As did Mr. Jones in the corner store, Antonio in your local pizzeria, and Dazza who fixes your car. Like them, you too are thinking about making your idea a reality. It's often said that Australians are an entrepreneurial lot. According to the Australian Bureau of Statistics, on average, just under 300,000 new businesses are established each year. So what does it take to be a successful business person? Well, research indicates that there are a number of character traits that are common to successful entrepreneurs. They include things like courage, drive, independence, confidence, passion, leadership, ideas, and resilience. You know, it's one thing to have a great idea, but quite another to go it alone, to bring that idea to life. Because when you're starting your own business, you are definitely going it alone. You alone are responsible for the success of your business, so you need to ask yourself some tough questions around whether you have what it takes. Questions such as, how much time and money am I prepared to risk on this business? Do I have the resources, financial, physical, and mental, to really see this through? And how will I stay motivated when things aren't going well? Let's say the baby cried till midnight. The next morning you argued with your partner over breakfast, and then you stubbed your toe on the way out the door. You will still have to throw open the business doors and carry on. Or if customers aren't coming through the door, or the council closes the footpath outside your shop, or your key supplier has lost your order, do you have what it takes to keep going? You know, it can be a lonely place at the top, but if you're the right person for the job, then it can be a very fruitful place to be as well. Okay, so if you're confident that you're the right type of person to run your own business, the next questions you need to ask is what and why. What is it that I actually want to get out of running my own business? And why? You know, for most people, part of the answer to this question will be, and needs to be, to make money. But even this simple outcome has a number of scenarios. Do I want to make lots of money? Do I want to make just enough to take care of the family and be able to spend quality time with them? Do I want to create a legacy for my family to carry into their future? For many people, the what and why is simply a chance to work at something they enjoy doing. The ballet school teacher, the mechanic, or the architect. And for some, it's an opportunity to use their skills and knowledge to improve the lives of others. The doctor, the wedding planner, or the pharmacist. It's important to be very clear in your own mind what you want to achieve and why, as this will help to focus your planning. To my way of thinking, having a business plan is absolutely essential. However, the value of a business plan actually lies in the planning itself rather than the end product. By developing a business plan, you give yourself the opportunity to explore different scenarios, decide on a path that you think will get you to your destination, and then what actions you'll need to take to get there. It's a bit like a roadmap or a GPS for your business. That said, many businesses, both new and established, operate without a clearly defined business plan, and there are any number of excuses for that. You know, I'm doing okay. Why do I need a plan? I don't have time. I don't know where to start. And what's the point because nothing goes according to plan? But I think with a plan in place, you are better able to achieve what you set out to achieve and with a greater chance of success. So as the old saying goes, fail to plan, plan to fail. Harsh, but research supports that you have a much better chance of making your dreams and goals a reality with a written plan. So to help with that plan, we use a framework called the 7 Ps. So let's have a look at each of those 7 Ps. The first P, and we've already looked at this to some extent, is purpose. In asking the what and why questions in the previous section, we were thinking about the purpose of the business. By identifying this purpose, we can then center our business on this, and all our other decisions and actions should be aligned to achieving this purpose. Now, some of the tactics that we'll then use to achieve that purpose are our product, people, place, price, and promotion. So firstly, your product or service. You need to think about and articulate in your plan things like exactly what is it that you are selling? What do you need to put it together? How does it go together? And what benefit does your customer get out of using the product or service? By clearly defining what your product is and the customer problem that it solves, you can remain focused on delivering a product that is valued by your customers. Then your people, those who are going to help you to achieve your purpose. In your planning, you firstly need to think about all the jobs that need to be done and what time and skills are required to do them. This then translates into the people that you'll need. Things like, who are they? What skills do they need? What experiences or behaviours do you want them to have? Then there's your place. Where will you operate from? From home? Is it online or a shop front? And in what location? How much area do you need and what facilities does it need, and so on. Next, your price. How will you set the price for your products or services? And what's the value proposition to the customer? And how much are they prepared to pay for that? And will this make you sufficient profit to be successful? And then promotion. And this is all about how you'll communicate with your customers. How do the right customers know that you have the product or the solution to their problem? How are they persuaded then to make a purchase from you? And what encourages them to come back again and buy again, or to recommend you to others? So I think you get the idea there. The last P then is performance, and this encompasses all of the other things. How do you measure whether you're successful or not? It's hard to pat yourself on the back and the team without these metrics in place. This, of course, relates back to your purpose as well and measures how well your product, people, place, price, promotion have achieved the purpose that you set out to. So by addressing these 7 Ps in a business plan, you can build a strong foundation for your business. Now, further insight into building a business plan, please join our Foundations of Business Planning live webinar or view the recorded version available on our website. So now it's time to stop talking about all those wonderful ideas we have and how it could happen. Let's start to create and bring this business idea to life by enacting the plan that we just spoke about. Now, this part of the process may not seem as exciting. There are many I's to dot and T's to cross. However, you'll be thankful in the end if you've been thorough at this stage. Remember, building a solid foundation is one of the keys to success and longevity. When creating your new business, you'll need to select the right legal structure that will help keep your tax to a minimum, protect your assets. And we're going to look briefly at the most common structures and the various pros and cons of each shortly. You also need to make sure that you're aware of the statutory obligations of being in business. And think about how you will fund the creation and launch of your business. And then finally, risk management. What are some of the things that you need to be aware of in terms of potential risks, and what needs to be put in place to reduce the impact on your business? So let's start though with business structures. There are typically 4 main types of structures, and it's important to understand the advantages and disadvantages of each structure, and where necessary, seek professional advice to set up the business in a structure that's right for you as the owner, as well as for the business. And remember too that changes to the business structure in the future could be quite costly. For instance, if you intend to grow significantly over time and employ people, it makes sense that your structure will need to be different than if you intend to only ever operate on your own. As a sole trader, you simply operate as you. You are one person, you are personally liable, you are taxed at your personal marginal tax rate, and you have full control. One of the drawbacks of this structure, though, is that you only have your resources, intellectual, financial, and so on, which may be restrictive to long-term growth. The next type is a partnership. Now, a partnership can be up to 50 people. The profit distributions are governed by a partnership agreement. Distributions are taxed at the partner's personal marginal tax rates. Now, with this type of structure, you have access to the collective knowledge and funding of all the partners. The challenge potentially being to get everyone to agree. However, remember that there is limited protection as you are jointly and severally liable for all partnership debts. The next structure we'll look at is a company. Now, the advantage of establishing as a company is that there's limited liability for the company owners. The company is its own legal entity and as such can trade and borrow as itself and is liable for its own debts. Responsibility is for the ownership or the shareholders, and management, that's the directors, is split. However, in small mum and dad businesses, it's not uncommon for the shareholders and directors to be the same people. Now, company profits are currently taxed at a flat company rate of 30%. Now, a company is more expensive to establish and administer. However, it can offer protection for personal assets and be easier to manage a change of ownership in the future. The final type of structure we'll look at is a trust. Now, a trust is the most complex of all the business structures. However, it offers most protection for owners and most flexibility in the distribution of profits. So a trust is established via a legal document known as a trust deed. The trust deed appoints a trustee who manages the finances of the trust on behalf of the beneficiaries. What the trust and trustee can and can't do are set out in the trust deed, as are the beneficiaries and their entitlements. Now, a trust is a financial entity as opposed to a legal entity. Assets and liabilities are held on behalf of the beneficiaries of the trust, but not actually owned by the trust. Profits are allocated to the beneficiaries, but are only taxed when withdrawn from the trust, and then they're taxed at the beneficiary's personal tax rate. Now, while this structure is more complex and costly to administer, it offers limited liability for beneficiaries and discretionary distribution of income between the beneficiaries. It's often used by family businesses that may span a few generations, or where owners have substantial assets or other interests outside of this particular business. So talking to your lawyer, your accountant, and your personal financial advisor will be beneficial when selecting the legal structure for your business. And remember to take into account what you want to happen with the business in future, not just what works for now. The next part of creating the business is to understand your statutory and legal obligations. Non-compliance with any of these may lead to substantial fines, audits, and remedial work that could jeopardise your business. So it's very important to get this part right. Now, when it comes to your statutory and legal obligations, there are four main areas that we're going to look at here. So let's start with registrations and licenses. Now, the first one under this heading is your ABN or Australian business number, which is a unique number that identifies your business. Amongst other things, your ABN should be recorded on all invoices, as if you don't quote an ABN on your invoices, then your business clients must withhold 49% withholding tax from any payment they make to you, which you'll then need to claim back from the ATO at a later date. Speaking of the ATO, you'll also need a tax file number or TFN, which identifies your business to the tax office. Sole traders will use their own personal tax file number, but partnerships, companies and trusts will be issued with their own TFN. Now, if you're going to be structured as a company, then you'll need to register with ASIC, or the Australian Securities and Investment Commission, who will issue you with an ACN or an Australian company number. AusKey is a relatively recent addition to this list of identifiers. It's a secure logon that identifies the business when it uses a government online service, such as the ATO Business Portal. Now, there are also various federal, state and local council regulations requiring different licensing and registration for different industries and so on. So the Australian Business Licence and Information Service, or ABLIS, helps find this information about government licenses, permits, approval and so forth that are required to operate. So ensure you visit ablis.business.gov.au to find that information. And finally here, unless you're going to operate under just your own name, then you'll need to register your business or trading name. A sole trader can simply use their own name, such as Mick Brown. But as soon as you add anything to it, such as Mick Brown's Garage, then that name needs to be registered. A company can also use its own name, but again, if you wish to use anything other than the registered company name, it needs to be registered as business name. The next area we'll look at here is taxes. So starting with GST or goods and services tax. If your business provides goods or services on which GST is applicable, then you must register to collect GST if your GST turnover exceeds $75,000 or if you're a taxi operator. The GST of 10% needs to be included in your price and recorded on your invoice or receipt. The GST you collect and the GST you pay are reported to the ATO in your Business Activity Statement or BAS. Now, depending on the size of your business, your BAS can be completed monthly, quarterly, or annually. It's a good idea to discuss with your accountant which is the most suitable for your business and for your cash flow. Another tax you'll need to manage is PAYG or pay-as-you-go withholding tax. You'll need to register for PAYG if you are withholding monies from payment to others, such as a business that doesn't have an ABN, or the taxes that you withhold from employee wages. Now again, this tax being withheld from payment needs to be collected and submitted to the tax office. Now you may also be paying PAYG instalments yourself based on your anticipated income, which are then netted against your end of year tax return. FBT or fringe benefits tax is applicable when you provide benefits to yourself or your employees, such as the private use of a business motor vehicle, it might be club memberships, perhaps holiday expenses and so on. Now this one's a complex tax and really is best discussed with your accountant. So these are just a few of the taxes that you'll need to manage. To get more information, refer to the ATO website and of course your accountant. Now, if you employ people, another area you will need to stay abreast of is superannuation. So as an employer, you are required to make contributions to your employees' superannuation fund, known as the superannuation guarantee. Any employee who is 18 years or over and earns $450 or more before tax in a month is entitled to a percentage of the amount they are paid to be contributed to their super, in addition to their wages. Now this percentage is currently 9.5%, with gazetted increases over the next couple of years. There are very tough penalties if this obligation is not adhered to and lots of legislation involved. So make sure you talk to your accountant and get this right. And again, there's more information available on superannuation on the ATO website. And lastly, you should understand your obligations as an employer and what your employees are entitled to. There are rules around what employees are entitled to at work, including but not limited to the hours of work, rates of pay and leave entitlements. The National Employment Standards sets out 10 minimum entitlements that must be provided to all employees. Now, in remunerating or paying your employees, ensure that you're familiar with the Modern Award, which sets out the minimum employment wages and conditions for an industry or occupation. Award details and other information can be found on the Fair Work Ombudsman's website, which is fairwork.gov.au. So getting your statutory and legal obligations right is an important step in setting up your business. There's lots of information available online, but having a good accountant and lawyer will be invaluable as you go through this process. The next thing we're going to take a look at in creating your business is how you might fund your business. There are two types of costs that you'll need to account for: your initial setup costs and then your ongoing capital expenditure and operating expenses. So getting your business up and running will incur a lot of different costs, from licensing and registrations, the professional fees of an accountant or solicitor that will assist with the setup, the office establishment costs such as a bond on a rented office, your furniture, technology, and marketing such as business cards, flyers, and so on. So it's important to understand which of these costs you might incur, how much they are likely to be, and how you are going to fund them. Do you have sufficient cash set aside? Will you need a financial partner or investor to get started? Or will you need to borrow for some of those bigger ticket items, such as your premises or machinery? Now, the money that you spend on items such as equipment or premises and so on is known as capital expenditure or CapEx. Now, in general, the funds to purchase fixed assets such as your equipment, plant and machinery, premises, vehicles and so on that are needed to run the business every day will generally come from two sources. The business owners or investors in the form of equity, or from external sources such as credit from your suppliers or loans from the bank. And these are known as creditors. Now, getting the right balance between these two sources of funding is important to long-term success. Too much borrowed funding can be expensive and risky for the business. But as an investor into the business, equity providers should be concerned about the effective use of their funds and the return that they will get from that investment. The other type of funding we need to plan for is the everyday operating expenses, known as OPEX. This includes buying stock, paying wages, rent, maintenance, marketing, etc., etc., etc. So this funding is also referred to as working capital. And the key to managing your OPEX or working capital is to have an understanding of the amounts involved and the timing of collecting and spending your money. So starting with spending, what do we spend our money on and what are our spending habits? Do we import stock from overseas that we need to pay for well in advance of selling? Or is there a value add process that delays getting our stock ready for sale or invoicing our service while in the meantime we still need to pay the wages, the rent and the overheads? So knowing these spending patterns is crucial to understanding the amount of OPEX or working capital that you'll need and managing your cash flow. You then need to make sales. And again, understanding the timing and the amounts will help you to manage your cash efficiently. For example, does your product have a long lead time to a sale? Or is the purchase decision and sales process relatively short? How effectively are your salespeople getting your product into the hands of your customers? Once you've made the sale, of course, you'll need to collect the money. Now, are you a cash business that collects at the time of the transaction? Or are you in an industry where you might need to issue an invoice for payment at a later date? If so, how long can you wait for your payments and how much credit are you able to extend? And how are you going to collect? Fortunately, new technologies like online payments or mobile EFTPOS machines are making it easier to get paid more quickly. And when you do get paid, then finally the cash comes back into your bank account and you're ready to start the whole process again. Now, many new businesses run into cash flow problems. But if you understand how much cash you need and how it flows through your business, you'll be much better placed for success. Now, still as part of the creation stage, the new business owner also needs to be aware of the different types of risks that could affect the business and what actions need to be taken to reduce the likelihood and impact of these risks. It's better to address this from the outset before things have a chance of going wrong, because it's much easier to play the what-if game now and put contingency plans into place rather than trying to think clearly during a time of crisis. And trust me, the time to recovery will be easier and shorter with some planning in place. So some examples of the types of risks that should be considered. Firstly, product risk. What happens if your product is not right for your customer? Or if perhaps the quality is not up to expectation? Do you have consistency of supply? Or even if your product should cause personal injury or financial loss? Having plans in place to address these potential risks helps to minimise the impact on the business. Next, think about asset risk. What if the equipment needed to serve the customer isn't available? For example, what if it breaks down or is damaged? How will you repair or replace the assets? And how will you serve your customers in the meantime? We should also think about supplier risk. So this is about ensuring that you can continue to meet your customers' expectations even if your supplier isn't able to meet yours. So what happens if your main supplier closes down or goes broke? Or if supplies are unavailable due to a disaster of some nature? Are there other suppliers or are there other alternatives that you can access? The next risk to think about is people risk. Now, this refers to something happening to one of your people that may have a detrimental impact on the business. What happens if you get sick or a key staff member is ill or leaves? Or even if one of your staff is injured on the job? What happens if you hire the wrong person, if they don't have the right skills or don't show the desired attitude and behaviour? It's expensive to recruit, so you want to get this right as often as possible. And how do you ensure that they do their job safely, accurately, and take good care of your customers? Another risk to consider is financial risk, and this includes things like interest rates, foreign exchange rates, trade agreements, or even just the general economy. And of course, your cash flow. And then finally here is customer risk. It's just not possible to please all of the people all of the time. So how will you handle customer complaints? Or if things get really out of hand, what if a customer takes to social media or even a current affair? Or what if your biggest customer suddenly stops buying from you? Now this could be due to their own cash flow, disaster of some nature, or even new competition. So understanding the likely risks to your business beforehand and the possible implications allows you to plan for prevention and to put into place some contingency plans for when events like this might occur. So you have your vision, you've worked out how you will realise your vision in a business plan, and you've created the business structure and everything's in place, ready to go, and it's time to launch. So your first goal should be simply to open the doors and let people know you are open for business. Your second goal should be to get that first sale. And this is where you really start to learn what you need to do to make your business successful. Now, it's always good to remind yourself at this point that regardless of the preparation and planning that you've done, success may not be immediate. Now, a great way to keep yourself motivated and on track is to set up a 90-day plan with key milestones to be achieved. Now, we recommend that milestones should be split into inputs, that is, your actions or activities, and outputs, the results that you want to achieve. Inputs are all about the effort. It reflects the work that has to be done, things like client meetings, writing content, building products, or delivering services. Make sure these goals are linked to your strategic goals. If you're completing the right inputs, then the results should come. Remember though, they may not come as quickly as you would like. The outputs or results, of course, are the reward for the effort. And typically these are number-based milestones such as sales, profits, volumes, and so on. Now, the early days of the business can be quite crazy until, of course, an operating rhythm is established. So at the end of your first 90-day plan, take some time out to do a post-implementation review of your milestones. Did your input milestones drive the desired outcomes? Did they make the boat go faster, if you like? If so, can you replicate them? But if not, what might you do differently? Then put in place your next 90-day plan, and so on until you get a robust operating rhythm that's producing the right results. When doing your post-implementation review, measuring your performance, don't ever forget the purpose of your business, why you set it up in the first place, what it stands for, because this is where your boat should be heading. So make sure you're on track in the 5 main strategic areas of product, people, place, price, and promotion, and that they're all pulling towards your purpose. Always remember, the hardest part is getting that first customer, And while getting your first customer doesn't guarantee your success, you definitely will not succeed without them. So when starting a business, you start with a vision. You turn your vision into a plan, what you are going to do with your 7 Ps. You then get your business set up to run from a legal and risk perspective, and then finally you launch. So in this webinar, we've covered a number of these areas, and it's now up to you to determine whether you think you have what it takes, and to turn your vision into the reality and start your own business. So thank you very much for viewing our Getting Started in Business webinar. For further information on starting a business, download our Ready for Business guide from the Davidson Institute website. So I trust you've found this information useful and relevant, and that it will help you to realise your business dream.